This morning, I'm interviewing David Malkin, a 60-year veteran for our business. David is former NAFA president, former ALU board member, and was the principal in the firm of New Jersey Life and Casualty. David has decided to fully retire in January. And I wanted to take this opportunity to congratulate him on a very successful career and for providing a wonderful example of what it means to bring the golden rule to life. I also wanted to share a conversation that I had with him about his observations of the business, past, present, and future. David, you started in the life insurance business 60 years ago. In 1963, the same time my dad started what is now Valmark. How did you get started in the life insurance business and what attracted you to it?
Well, I really, getting out of school, I didn't know what I wanted to do. My father was a real estate broker, and I lost him, unfortunately, when I was 25 years old. But my uncle, who was a manufacturer's rep, suggested the life insurance industry. And he introduced me to his insurance agent, who was with the New England at the time, in Pennsylvania. I was living in New York. I didn't want to relocate. So I actually interviewed with 11 different insurance companies.
Wow.
11. And I started my career with the New York Life in a bullpen with a payphone. And I had to put dimes in the payphone to make calls. and, and my first call, Larry, was awful. It was a real estate call with a couple at home in the evening. And my manager, now I'm 23, and my manager is in his 60s. And to me, he was a very old person. And he insisted on going with me. That was a big mistake. Because even after I answered several objections, this couple said, look, we're going to think about it. Thank you very much for coming. And the manager suggested that they go in the dining room and think about it again. And the homeowner suggested we get out of his house. That was my first
rough start.
Very rough start, very rough start. But I was very fortunate. I had a mentor in the New York Life agency that I was in. And after 3 years of struggling, and I mean really struggling, with Sandy hoping I would get a job with a salary, I finally decided to leave New York Life, and I joined two former New York Life managers who created a new agency with another company. And I worked there for 6 years, and it was a struggle for the whole 6 years. And then all of a sudden, I started going after young doctors in practice, not in practice, interns or residents. And I kept running against a company that had representatives in all the hospitals in all of New York City. So I went to see him, and he hired me, and he gave me Mount Sinai Medical Center in New York City. It's the only place I went for almost 7 years. I get there at 7 o'clock in the morning, and I'd have breakfast with the surgical residents who were going to scrub in at 8. And then when they left, then I had coffee with the internists, cardiologists, gastroenterologists, et cetera. And at 9 o'clock, I had coffee with the shrinks. And then I went to every pavilion at Mount Sinai. I had 2 or 3 lunches. I'd stay till 7, 8 o'clock at night to find who was on call, interns, residents, attending physicians. After 6 months, I knew every physician in the hospital. Then all of a sudden, my picture appeared in the annual report of the medical school. And it said, there's the insurance guy. And I laughed and I said, perfect. And everybody knew who I was. After 3 years in the hospital, the assistant director of the hospital stopped me and asked me who I was. He said, I see you every day. Who are you? So I sat down and I explained with him that I work with interns and residents. I get them going into practice loans. I get buying services for them. And I help them buy life insurance to protect their families, disability insurance to protect their incomes. And then I sent he and his wife to Mallorca for 6 days. It cost me a fortune, but I owned Mount Sinai after that. And if another insurance guy came in the hospital, I had him thrown out. But after 6.5 years, I figured I had done my internship residency. So I went out into practice with 6 generations of physicians who had become clients. And that's how I started in the life insurance business. It was a slow start, but it worked
David,
out really well.
several things in what you said there. It's a target market where you
Yes,
really understood what the issues were. That allowed you to really network, get referrals. These are all basic fundamentals, and just doing the hard work early in your practice of seeing the people, seeing enough people. It's no surprise that you succeeded, but it's easy to see why so many people starting out in our business don't succeed.
right.
We were talking about things that have stayed the same and things that changed. And in our conversation preparing for this, there's more things that have stayed the same over 60 years than have changed. What are some of your habits that you've continued throughout this 60 years that have made you so successful?
Well, again, mentorship was so critical to me. I got very active in NAIFA, which at that time was the National Association of Life Underwriters. I met so many people who were members of the round table who were willing to share. And I learned that in order to be successful, I needed to ask great questions, shut up and listen. And it was a terrific experience. I watched Tom Wolfe, who was a legend in the business when I started the business, interview somebody in his office in Connecticut, a businessman in a suit and a tie. He brought the man to tears. I just couldn't believe it. And I learned a very valuable lesson: to ask questions, shut up and listen. And if you ask the right kind of questions, people will open up and talk for 20 minutes. They'll tell you everything about their lives, who they love, who they really care about, what's important to them, the life experiences they had with their parents and their children. And once you get them talking like that and you shut up and listen, they think you're very smart.
You also really get to know what's important to them and why they need that insurance to protect their family, a business associates, maybe charities. What else has been something? So getting involved professionally,
Yes.
asking really good questions. You have always been a great networker, and I think you've passed that trait on to your protege, Michael Dranoff. Tell us a little bit about networking.
Well, New Jersey Life and Casualty is an amazing story. Started in 1948, and we are now on the 4th generation of leader. I was 3rd. Mark Byron preceded me, and now Michael. And at NJLNC, by the way, once you turn 70, you can't be the managing partner anymore. You can still be a partner, but you can't be the managing partner. So we've transitioned through 4 generations, and it's worked out beautifully. And I remember when I took over for Mark never, ever criticized me. He'd offer suggestions, but I really had to ask him for it. And the same thing happens with Michael. You know, I don't offer anything until he asks me. But we at NJLNC, when I joined them, they were called New Jersey Life and Casualty Associates. They were not a casualty agency, but they had over 20 property casualty firms that we were the life part of that firm. We went to that firm, we got to know all the people, the brokers in the firm, and they introduced us to their clients. And we went out and sold life insurance, disability insurance, 401k, and all kinds of retirement plans, and shared the compensation. It was a great way to network. And then I had a very other interesting experience in my career. I was with a property casualty firm in Lower Manhattan that had been around for over 100 years. And they introduced me to a client of theirs who was a law firm, The law firm was called Strzok and Levan, still around with hundreds of partners. But at the time, they only had 79 partners when I met them. And I sold them on the idea of buying key man life insurance on all the partners so they could buy them out in the event of premature death. So I went and I interviewed every single partner to take an application. And one of the questions I asked them was, what does your will say? I didn't ask them if they had a will. I just said, what does your will say? Well, half of them didn't even have a will. And those that did have wills, some of them, they wrote their first wills when they had their first child. And they hadn't updated their wills at all. And eventually the chairman of the Trust and Estates Department called me. He said, you're the worst thing that ever happened to me. He said, I have more pro bono work than I can handle. He said, what did you do? I said, I just asked them what their will said. He said, just a great question. And so I use that question with everybody I meet. And when I meet anybody, I'm sorry, Larry, but when I meet anybody, I really want them to tell me about them. So I ask them where they grew up, were they into sports, where did they go to college, where was their first job after school, how did they get to this firm, tell me about your firm. And they just talk forever. And I learn everything that I need to really help these people.
Andrew Carnegie said, those people are successful are those who find a niche and stick to it. And I just see this pattern of you working first with the residents and lawyers and property casualty agents, creating win-win relationships and really highlighting the expertise that you and your firm have built. What are some things that have changed? I think about you interviewing with 11 firms, all that had career systems.
Right.
Wait, I can only think of 2 or 3 left today. What else has changed?
Well, that was a major thing, no question about it. And with all the relationships that I made, starting with my local Life Underwriters Association, then the state, New York State, and then the national, so many of the career agents, myself included, obviously, became independent. And a lot of us, we needed some place that we could all meet and talk. And that's what drew me really to the $1 Million Roundtable and AALU both, because you had quality people that you really wanted to talk to and listen to. And so I built a lot of relationships in my professional career, many who are just great friends of mine now. And so, but it was also interesting because once the agency system died, other than New York Life and Guardian, et cetera, it was very hard for industry associations to find people to ask them to join. They used to be able to go to New England or New York Life, Guardian, et cetera. Now, there was only just a couple of career agencies around, and those industry organizations didn't know where to find us. So obviously, membership in career organizations has dropped dramatically.
Well, we also talked about this change from almost all the companies were mutual companies when both you and my dad started. And
yes,
through a series of demutualizations and some of those companies failing, we're now mostly stock companies with a few mutuals. What are your thoughts on that?
Well, yeah, I had an experience. I owned a $500,000 policy, whole life policy, with a career company, not one that we've mentioned. And well, because of what's happened, low interest rates, this particular career company didn't go to stock. They became a mutual holding company, which is like nowhere. Management still isn't accountable to anybody. And the dividends with my policy were $50 a year. I had over $300,000 of cash value, and my dividend was $50. So a change for me was to do a 1035 to a company that Valmark represents big time. And the policy was paid up. And now the death benefit exceeds the face amount because it is, I've got equity in the policy through mutual fund-like investments. So today, I wouldn't recommend a mutual company policy to anybody.
Well, you know, I think some of the stock companies like Lincoln, Prudential have had greater innovation. You look at some of the mutual companies, still pretty much all they sell is whole life.
Right.
So the stock companies have had greater innovation. You've seen companies come and go, and I've always viewed you as a strong advocate for your clients. You look and you ask hard questions, but it's always advocacy first for your clients. You've done a wonderful job of representing them through the years. This succession that you have, I had forgot the part about retiring at 70. That really did force you to think about having the firm go on ahead of reaching age 70, right? Do you think that that's one of the critical things that has allowed New Jersey Life and Casualty to go to its fourth generation of ownership?
Well, let me put it this way. I'd like to take the credit for Michael Dranoff. But Michael Dranoff was Michael before I met him. And Michael was actually a backroom person. He had developed software. He was doing estate planning and financial planning solutions on the computer before many. And we hired him to be a back office person. And after about 2 years, he came in the office. He said, "David, I want to do what you do." So I said, "Okay, you hire your replacement." Okay. And, and that's what happened. And so he was just natural that Michael would succeed me when I became 70. We don't retire at 70. I still, for the last 10 years, I've still been a producer, but I'm not the managing partner anymore. So the succession was great. And Michael is so bright. He gets along with everybody. Everybody loves him. Everybody wants to work with him, and they can't get enough of him. He's just a natural. And we're very fortunate that he joined the firm when he did.
Well, he is a master networker as well. I wouldn't have ever thought of Michael Dranoff as an inside technical guy. He has good technical skills, but
right.
I learned something else by asking you that.
That's right.
So, David, what else do you think is different today than it was when you started? What advice would you give to a young person starting today that is different than when you started with the New York Life?
They have to put themselves in a circumstance where there are successful people who can teach and mentor them. And it's just like doing an apprenticeship. You won't make a lot of money in the first couple of years, but it'll make all the difference in how much money you make after that. So I would definitely say you have to put yourself in a situation like Valmark. Valmark is absolutely unique. It is. You developed a way to recruit and train people that nobody else has. And it's just worked out beautifully. Everybody at Valmark is bright. They get it. They understand we work as a team. They need to find an agency or some other people that they can join as an apprentice. Trying to do it on your own, I couldn't have done it. Not now.
And in some ways, it's more complicated because you have multiple companies, a wider selection of products. The learning curve is steeper for people coming in today. I'd agree with that advice.
Yeah.
No.
My father, he was in World War II, and he had 2 sons. So he was gone for 2.5 years. He was captured by the Germans, and he escaped because it was towards the end of the war and they were in retreat. He was the person that I was closest to in my whole life, other than my wife and my children. But when my father passed away, he had $20,000 in medical bills and $10,000 of life insurance. And that was a learning experience for me. So when my uncle suggested the life insurance industry, I just thought of my father. And that motivated me tremendously.
Our
Yeah,
products really do make a difference.
they
And
sure do.
the same thing is true with my father. His dad died when he was 19 years old. And dad had to take on supporting his mom and his two younger brothers. And
Right.
that had a profound influence on his view of the importance of our industry.
The
Uh,
insurance is a miracle.
it
It is
is.
literally a miracle. And when I tell young people that I've mentored, I said, I never met a beneficiary who asked me what the premium was. I never met a beneficiary who wouldn't give me twice the premium at that moment in time, for twice the benefit.
Yes.
And we used to be, well, another major thing that's changed, we used to be able to deliver death claims. Insurance companies don't let us do that anymore. But I got to tell you, that is one of the most emotional experiences you could ever have. I have cried with my clients so many times. And there's, after somebody passes away, everybody's there bringing in food and spending a week or so. And then they all go away. And we're there. And we set up the Social Security and we bring them to the accountant, we bring them to the bank. We provide them with a way to budget, et cetera. And it's a life-changing experience. And now that we can't deliver those checks, that's something that new people just will never have, that experience. It's a shame. It's a shame. And you and I both have done great planning for our own families. And I've had meetings with my three children. They know exactly what's going to happen and why. And why it's interesting that Sandy and I have money, okay, and our kids don't expect to get that money. But they're going to get it. They will get it. But we treat our children fairly, not equally. And I explained, if I pay for orthodontia for one of my kids, I don't put the same amount of money in their bank account. That's treating kids fairly, not equally. Same thing with if they want to go to college, fine. If they want to go postgraduate, okay, that some do, some don't. So we've had great meetings with our kids, and they really appreciate the planning that we've done.
I'm going to ask you one more question, and then we'll turn off. What is your funniest story of working in the business? Just an unusual client situation, something you just didn't expect. What's the funniest thing that happened to you during this period of time?
I can't think of something funny. I do think of, when I was working with this property casualty firm in Lower Manhattan, and I was introduced to a law firm, and I insured all the partners, but then I suggested to the partnership that they buy additional key person life insurance on the managing partner, because he was responsible for almost 70% of all the clients that they brought in. And so they did. And they said, well, why would he allow us to do it? I said, because we're going to give him some more split dollar insurance for his family. That's why. So that was the quid pro quo. And I put $3 million additional insurance on him. And I paid that claim within 11 months. And so I think of things like that, geez, I'm so appreciative of the fact I had the opportunity to help people like that. That's what I think of.
And that might have made the difference of that firm going on. If you had a rainmaker partner who brought in that much business and all of a sudden it just stopped or is interrupted, the firm might not have been able to continue.
Exactly right. Exactly right. Yep.
That hasn't changed. That's still, that idea is just as important today as it was back when you did it.
That's right. And so I have great memories of delivering claim checks. I really do. And as I said, there's never enough money. No matter what the size of the check, there's never enough money. I'll give you one more. I had two brothers. They owned, they provided everything for asphalt, for highways, quarries, several quarries. Very, very wealthy guys. When I first met them, their desks were facing each other in the same office. They didn't have split offices. I just knew it was a really close family. And so when I said to them, what's the business worth? They said, $200 million. I said, wow, well, that's a challenge for me. They said, why? So it's not easy to get $100 million of life insurance on each of you. You know, we're going to have to do stress tests. We're going to have to provide financials, corporate financials. And said, oh, we're not going to buy that 100 million. No way. I finally convinced them. They bought 50 million on each life. 2 years later, one of them, the family went to Lake Placid to go skiing. He decided not to. He went deer hunting by himself. They came home. They couldn't find him. They found him 3 days later. He had a heart attack in the woods. And he was still lying there when they found him. And when I delivered the death claim to his brother, I said to him, you know, I remember a story that I learned a long time ago about these guys. They were walking across the desert. Night came, they lit a fire. Then they were about to go to bed and a voice came to them in the middle of the night, said, fill your pockets with sand. And they looked at each other and didn't know what to do. But they figured, all right, we'll put some sand in our pockets. The next morning when they awakened and they looked in their pockets, the sand had turned to precious stones. They were happy they put sand in their pocket. Sand they had put in twice as much. And the brother said, touche.
Wow. Great story. David, working with you and your firm over these years has really been one of the highlights of my career. I look at you and your career is marked by professionalism, giving back to the industry, and living the golden rule. I just have loved working with you, and I will certainly miss working with you, but I want to stay in contact. And I am wishing you and Sandy a wonderful time in your retirement, and want to thank you for the great legacy that you've built and for sharing some of these thoughts with our member firms today. Thank you.
Right. Thank you. Thank you. And by the way, I always thought of there's no right way to do a wrong thing. And, you know, you just captured that, the whole firm has. So it's been my pleasure also. Thank you, Larry.
I think that's the most important bond that we share is helping clients make good decisions and offering them solutions we would put in place for ourselves. And I've seen that in my 15 years of working with you. And I am proud to have worked with you, David. Thank you.